Hello everyone, welcome to another video and I'm your friend Bharath Shankar. So in today's video we'll talk about Tata Motors Limited, which is one of the most popular stock among retail investors. And this stock has fallen more than 46% from its peak price. And now some of you might think that India's economy is slowing down with sluggish GDP growth, which is impacting Tata Motors. Yes, it does, but only to a very limited extent. The bigger concerns for Tata Motors are coming from somewhere else. And also some might speculate that Tesla's entry into the Indian EV market will damage Tata Motors EV business. But trust me, Tesla's entry into the Indian market can only cause a small dent in Tata Motors business. The bigger impact on Tata Motors is coming from somewhere else. So in today's video, we'll deep dive and try to understand the reasons behind why Tata Motors stock price is declining continuously. And we'll also try to understand whether is it due to some temporary factors or there are some long-term concerns developing within the company. But before we understand why the stock price is falling, we need to take a closer look at Tata Motors business model because a major reason for the price drop lies in how the company operates. But before we move forward, if you are enjoying the video so far and appreciate the efforts my team and I put into it, please hit the like button and drop a simple thank you in the comments. And for more such informative videos, consider subscribing to the channel. And also if you are interested in learning about the stock market in depth, you can attend our weekly webinars which takes place on Saturday. And this week we are hosting a special session on how to spot red flags while picking multi-bagger stock. The registration link is in the video description and in the pinned comment you can go and check it out. So now let's begin our discussion with the business overview of Tata Motors. So Tata Motors business is divided into three key segments. So segment number one is Jaguar Land Rover or JLR. So this is company's biggest revenue driver, contributing about 71.6% of the total sales. Simply put, if Tata Motors generate about 100 rupees in revenues, about 71 rupees come from Jaguar Land Rover or JLR. So this makes JLR the most critical segment for the company's performance. And then comes segment number two, which is commercial vehicles or CV segment. Despite being a market leader in India, this segment contributes only about 16.2% of the total revenue for Tata Motors. It includes vehicles like buses, trucks, vans, which are mainly used for commercial purposes. And then comes segment number three, which is passenger vehicles or PV and electric vehicle or EV segment. This includes cars for personal use, and you might have noticed more Tata Motors car on the roads recently. However, despite this visibility, the company's revenue isn't growing significantly. This is because this segment contributes only about 10.9% of the total sales. So even if the sales increases, its impact on Tata Motors overall revenue remains very limited. And now, after understanding each business segment of Tata Motors, a question arises: what is the problem because of which the stock price is continuously falling? So right now the issue with Tata Motors is that each of these segments are facing challenges, though the nature of these problems differs. So now let's break it down one by one and try to understand what is causing trouble in each of the segments in Tata Motors business. So now coming to the first segment, which is Jaguar Land Rover or JLR. So Tata Motors Jaguar Land Rover division consists of four key brands. Number one, Range Rover, number two, Defender, number three, Discovery, and number four, Jaguar. And if you compare the Q3 sales of each of these brands on year-on-year basis, which means quarter 3 of this year with quarter 3 of last year, then you will find that Range Rover in Q3 2024 sold about 52,900 units, and in Q3 2025 it sold about 59,200 units, which means there is clearly a growth in sales. And then coming to Defender, in Q3 2024 it sold about 27,100 units, and in Q3 2025 it sold about 30,600 units, which means Defender sales are also growing. And then if you talk about Discovery, in Q3 2024 it sold about 8,900 units, and in Q3 2025 it sold about 9,100 units, which means sales are more or less stable here. But then when you see Jaguar, in Q3 2024 it sold about 12,100 units, but in Q3 2025 it sold only about 5,600 units, which means there is a sharp decline in sales. So from this data it's clear that Jaguar is the biggest problem. Its sales volume has significantly dropped, indicating weak demand. But hold on, Jaguar is not the only problem. Jaguar is one of the problem. We'll talk about the other problems as well. But for now, let's try to understand why Jaguar is struggling and what the company is doing to fix Jaguar's issues or problems. So now, one by one, let's try to understand why Jaguar is struggling. So reason number one is delayed EV strategy. If you see, Jaguar was slow in launching electric vehicles, while competitors like BMW, Mercedes and Audi have already introduced powerful EV models. Then coming to reason number two, which is weak brand image. Jaguar was once considered a premium and stylish brand. But unfortunately or sadly, its market appeal has faded over time. Reason number 3 is tough competition. So once there was a time when brand name was enough, but now luxury car buyers prefer brands offering better technology and premium features, making BMW, Mercedes and Audi more attractive choices. And then comes reason number 4, which is lack of exciting models. Because if you see, Jaguar's recent models haven't introduced anything new or anything groundbreaking, which has failed to impress its high-end customers. And now, because of all these collective reasons, Jaguar is struggling. And now, a obvious question arises: if company knows all the problems, then what is the company doing to fix these issues or problems of Jaguar? So recently, Tata Motors have taken some very strong initiatives to reintroduce Jaguar as a brand. So in this chain of initiatives, Tata Motors plans to make Jaguar a all-electric brand and is making heavy investments in EV models. So no more petrol diesel vehicles or hybrid vehicles, only EV models for Jaguar. And along with that, Tata Motors has taken a very big bet on Jaguar's rebranding strategy, where the company is working on a strong brand revival to attract new generation buyers. And recently, Tata Motors even changed the iconic logo of Jaguar. And though the public reaction was mixed, where many felt that the classic and iconic Jaguar has turned into something funky. But the truth to be told, what is the use of all the classiness and the icon if it is not turning into sales and revenue? Because ultimately, if the cars are not selling and if it is not turning into revenue, then it calls for the company to reinvent the brand and reinvent the business. And that is what exactly Tata Motors is doing with Jaguar right now. And also, it's not only about rebranding, it is also about upgrading and adding advanced features. So with this chain of new initiatives, Jaguar is also adding new age tech and features to its cars to compete with competitors like BMW, Mercedes and Audi. And with these steps, Jaguar aims to regain demand and strengthen its market position. So currently, these are the challenges with Jaguar and how the company is trying to fix these challenges. So now the issues are not only with Jaguar, but Tata Motors Land Rover division is also facing challenges and issues. And now some of you might say that, Bharat, we saw that Land Rover sales are continuously increasing. The growth is healthy. So what could be the issue? So unlike Jaguar, Land Rover issue is not demand but supply. Despite strong demand, Land Rover is struggling with production delays primarily due to an aluminium shortage. So now obviously the question comes, what caused the aluminium shortage? So a major flood in Switzerland disrupted operations at one of the largest aluminium suppliers of Tata Motors. Since aluminium is a critical material for making Land Rover's high-end SUVs, its limited supply has slowed down the production, causing production delays in Land Rover. So because of these reasons, even after strong demand, the lower production has caused lower supply in the market, and lower supply has lowered the sales and revenues of Land Rover. So in simple words, Land Rover's growth could have been much better if it had not been for the shortage of aluminium supply. So now the question comes that, is it a long-term problem? So fortunately, this is a temporary issue. Once aluminium supply returns to normal, Land Rover's production and sales should also recover. So after this, let's try to do a geographical analysis and try to understand where is Tata Motors actually struggling. So far we have understood that how Jaguar is facing demand issues and Land Rover is dealing with supply constraints. Now let's try to analyze the sales performance by region to see where growth is slowing down. So if we see sales data of Q3 of Jaguar Land Rover by region, then you will see that in UK, in Q3 2024, company sold about 21,200 units, but in Q3 2025, company sold only about 17,600 units, which means there is a negative growth in the sales. In North America, in Q3 2024, company sold about 26,500 units, and in Q3 2025, company sold about 38,100 units, which means there is a strong growth here. But if you see European sales, in Q3 2024, company sold about 2,400 units, and in Q3 2025, company sold about 21,600 units, which means in Europe there is a moderate growth. But then if you talk about China, in Q3 2024, company sold about 15,000 units, but in Q3 2025, company sold only about 9,300 units, which is a sharp decline in sales. And in other OC market, in Q3 2024, company sold about 18,000 units, and in Q3 2025, company sold about 17,900 units, which means there is a slight drop in sales. So with this data, we can see that UK and China are the biggest problem areas for Jaguar Land Rover right now. So now let's try to understand why Jaguar Land Rover is struggling in UK and China. So starting with UK, so the main reason for fall in UK sales is Jaguar's complete relaunch strategy, where Jaguar has stopped selling new petrol and diesel models in UK to fully focus on electric vehicles. The company has paused sales on purpose to prepare for its 2026 target for making Jaguar a fully electric luxury brand. As a result, Jaguar sales in UK have dropped sharply while Land Rover sales remain stable and even shows slight growth. So this is part of JLR's reimagined strategy aimed to transforming Jaguar into a high-end electric brand. So while UK sales are falling now, but this drop is intentional and a part of a long-term plan from Tata Motors. And now let's try to understand why Jaguar Land Rover is struggling in China. So unlike UK, where the sales drop is due to strategy, while China's problem is external and more serious. So there are 5 reasons why Jaguar Land Rover sales in China are falling. Reason number 1 is intense competition from Chinese EV brands, because local companies like BYD have launched cheaper and better electric cars, taking away Jaguar Land Rover's market share. Reason number 2 is China's slowing economy, because economic weakness has made people more cautious about buying luxury cars. And then reason number 3, fast EV adoption in China. If you see, Chinese consumers prefer fast, high-tech electric vehicles, but right now Jaguar Land Rover's EV lineup isn't strong enough yet. Reason number 4 is US-China trade war and high import taxes, because right now if you see, tariffs on imported cars have increased, making Jaguar Land Rover vehicles even more expensive in China. And then comes reason number 5, which is Jaguar Land Rover's branding issue in China. Some experts believe that JLR failed to adapt to changing consumer preferences in China, making its brand less appealing. And now how JLR is trying to fix this problem in China. So first, JLR is launching China-specific EVs, where JLR is working on new EV models tailored for Chinese markets. And then point number 2, local manufacturing partnerships, where Jaguar Land Rover has partnered with Chery, a local automaker, to produce cars within China to reduce cost. And along with reducing cost, it will also help to dodge the tariff, which are being the side effect of US-China trade war right now. Point number 3, they are trying to make some import strategy changes, where adjusting the supply chain planning to minimize the tax impact. Point number 4, revamping marketing and branding, where Jaguar Land Rover is positioning its brand in China to attract new buyers. So now what are the final thoughts on Jaguar Land Rover's challenges, which is Tata Motors' biggest revenue driver? So if you see UK sales drop, it is actually planned and it is temporary, because it is part of Jaguar's EV transition. But on the other hand, China's sales drop is more concerning, because it is a mix of competition, economic slowdown and rebranding issues. And since Jaguar Land Rover contributes nearly 2/3 of Tata Motors revenue, these regional slowdowns are impacting the overall financial performance of Tata Motors. So now let's move on to commercial vehicles and passenger vehicle segments to see what's happening there. So first, let's try to understand the commercial vehicle segment, and let's try to understand what's going wrong there. So Tata Motors is a market leader in India's commercial vehicle segment, but even here problems are emerging, because if you see Tata Motors commercial vehicles market share, it is continuously declining, because in financial year 2023 the market share was about 41.7%, and in financial year 2024 the market share reduced to 39.2%, and in Q3 financial year 2025 the market share even further reduced to 36.5%. And the biggest decline has been seen in medium goods vehicle or MGVs and lightweight goods vehicle, which is LGVs. And also if you see the sales, it has also slowed down, because in Q3 financial year 2024, Tata Motors sold about 98,800 units of commercial vehicles, and in Q3 2025, the sales are down to 97,400 units. So if you see in commercial vehicles, Tata Motors is losing both market share and sales volume. And now the question comes, why the commercial vehicle segment is facing challenges. So reason number 1 is rising competition, because see, other players are aggressively gaining market share, leading to a steady decline in Tata Motors dominance. Reason number 2 is industry-wide slowdown. It's not just Tata Motors, the entire commercial vehicle sector is struggling due to slower infrastructure projects, reducing demand for construction trucks, heavy rains impacting mining activities, lowering the need for heavy duty trucks, and economic slowdown making business hesitate to invest in new trucks. And then comes reason number 3, which is the new Bharath stage emission norms or BS emission norms, where the new BS emission standards have made trucks more expensive, discouraging buyers. So now the obvious question comes that, will these problems continue? So if you see the current situation, the temporary slowdown is due to macroeconomic factors, And if you see the future outlook as the economic activity picks up, demands for commercial vehicles is also expected to recover. And once the demand recovers, hopefully the sales of Tata Motors commercial vehicles should also recover along with this. Now let's move to Tata Motors' most exciting segment, the passenger vehicles and the EV business. So now if we see the passenger vehicle and the electric vehicle segment, it is a stable and slow performer because compared to Tata Motors' other segments, the passenger vehicle and the EV segment has been relatively stable. However, despite multiple new launches like Tata Nexon, Tata Curve, etc., the company hasn't been able to gain market share, which is a concerning factor. Because if you see, the market share has been declining because in financial year 2023, the market share was about 13.5% and in current market, the market share is about 13.3%. And similarly, if you see the sales growth, it has been more or less on the lower side because in Q3 2024, the company sold about 1,38,600 units of cars, and in Q3 2025, company sold about 1,39,829 units of cars, which means there is a slight increase in sales, but still this growth is on the lower side. So now obviously the question, what's causing this slowdown? So reason number one is high inventory levels at dealerships. So dealerships have excessive stock, but demand isn't growing fast enough, slowing both new productions and also sales. Point number two is market normalization, because if you see, post-pandemic car demand was exceptionally high, but now it's returning to normal levels. Point number three is rising competition in SUVs, because if you see, brands like Mahindra and Mahindra are offering strong SUV options, giving Tata Motors tough competition. And also if you see the EV segment, Tata is losing its dominance. And of course, we have to understand that in India, EV is still in a nascent stage, and also Tata Motors had an early mover advantage as well. But right now, if you see, Tata Motors electric vehicle market share is declining because in Q3 2024, market share was about 73%, and in Q3 2025, the market share fell to 53%. And also if you see the EV sales growth, it has slightly increased because in Q3 2024, company sold about 15,200 units, and in Q3 2025, company sold about 16,100 units. So there is a slight increase in sales, but still market share dropped significantly. So now the question arises, what's actually happening in Tata Motors EV business? So earlier Tata Motors was the clear leader in India's EV space, but now new players like Mahindra, Hyundai and Maruti Suzuki have entered the EV market, giving buyers more choices. Previously, if someone wanted to buy an EV, Tata Motors was the only mainstream option, but now with more EV models available, Tata Motors is losing its monopoly. So now looking at the overall challenges faced by the passenger vehicle segment of Tata Motors, a question arises that will this segment recover? So if you see right now, what are the short-term challenges this segment is facing? Number one, high inventory. Number two, slower demand. And number three is rising competition. But if you look at it from the long-term potential point of view, then once the government cuts interest rates or accelerate the interest rate cut and economic growth picks up, demand for passenger vehicles and electric vehicles should also improve. So now, after understanding all these challenges which are faced by all the three business divisions of Tata Motors, and also understanding the cause, whether they are temporary or prolonging, and what are the steps Tata Motors is taking to solve these challenges and problems, now a question arises, what next for Tata Motors? Because now that we have analyzed each segment, the big question remains, what's the future of Tata Motors? And to answer that, we need to track some crucial factors that are deciding Tata Motors' growth trajectory. So now let's break them down one by one. So first, let's try to understand the market outlook. Basically, what to track for Tata Motors future or what to look out for Tata Motors future. So far, we have analyzed the challenges in each segment and understood why Jaguar Land Rover is critical for Tata Motors' success. Now let's discuss the key factors investors should track to understand where Tata Motors is heading or headed. So number one, you have to track the quarterly performance of Jaguar Land Rover sales volumes. And why this is important? Because Jaguar Land Rover contributes about 70% of Tata Motors revenue. If Jaguar Land Rover sales improves, Tata Motors stock can also recover. And of course, if the sales decline, then there could be more trouble waiting for Tata Motors. So investors should take a closer look or monitor the Jaguar Land Rover sales every quarter. And then point number two, investors should track the market share of commercial and passenger vehicle segment of Tata Motors. And why does this matter? Because Tata Motors market share in commercial vehicles and passenger vehicles is falling due to strong competition. And if the market share continues to decline, it signals signals weak competitiveness, and if Tata Motors recapture market share, it means the brand is still fighting back. And for this reason, tracking market share trends can indicate whether Tata Motors is improving or struggling. And then point number 3 are global events like Donald Trump's trade policies and Tesla's India entry. So first, if you understand Donald Trump's trade policy, if Trump imposes new trade tariffs, it could increase Jaguar Land Rover's import cost in key markets like USA and China, and this could hurt sales and profitability of Tata Motors. Now here some might ask that Jaguar Land Rover is a UK brand. If Trump or USA is fighting with China and they are having a trade war, how will it impact Tata Motors sales and profitability? So here I have to understand that if Trump imposes new tariffs on imports from the UK, it would directly increase JLR's cost for vehicles exported to the US. This is point number 1. Point number 2 is, if Donald Trump targets China with tariffs, it could affect JLR's business indirectly by reducing the demand in one of the biggest markets, because China is one of the biggest markets for Jaguar Land Rover. And point number 3, if Donald Trump targets European auto imports in general, it could impact JLR's competitiveness in the US market. So while JLR is mainly a made in UK brand, but still trade tariffs on UK or EU made cars could still increase the cost and impact Tata Motors sales and profitability. So now coming to point number 2, which is Tesla's India entry, and is it a threat to Tata Motors? So first of all, it might not be an immediate threat, as Tesla might take at least 1 or 2 years to set up its shop in India. And also if you see, Tesla's cars will be high end. Even if the import duty is cut from 110% to 15%, still Tesla's car would come around 28 lakh to 30 lakh in the starting range. But having said that, investors should track the policy changes and Tesla's India plans. And right now, Tesla is not the biggest concern of Tata Motors. The real threat comes from Chinese electric vehicle companies, which are known for making affordable electric cars with superior features. And here is the big risk. The Indian government is considering reducing the import duty on electric vehicles from 110% to just 15%. If this happens, India could be flooded with cheaper, feature-packed Chinese electric vehicles, creating serious competition for Tata Motors electric vehicle business. And also I would like to ask you guys, if Chinese companies come with better EV at better price, will Tata Motors and companies like Mahindra and Mahindra will be able to compete with them? Whatever you think, you can write it down in the comment section. And of course, as an investor here, you should also watch out for the change in government policy. If the government reduces the import duty from 110% to only 15%, you should also check if this reduced import duty is only applicable to the US or to the rest of the world as well. And also, will Government of India put any restriction on specific Chinese players which can flood the market with cheaper electric vehicles? So what is the conclusion? Should we worry about Tata Motors? So first of all, if you see, Tata Motors is a well-managed company with a strong business foundation. And of course, currently there are temporary challenges across the segment. There is demand issue in Jaguar, there is supply constraints in Land Rover, and also there is competition pressure in commercial and passenger vehicle segment. But here we have to understand that this is a natural cycle in the automobile industry. And also why Tata Motors can bounce back, because the management is confident about the future growth. The company is investing in new product launches, stability and digital transformation, and also the company's passenger and EV segments have a strong long-term potential. And as a wild card, if Jaguar's relaunch succeeds, it could be a game changer for Tata Motors. And also another hidden benefit could be the potential demerger, which is going to happen very soon, where Tata Motors commercial vehicle business and Tata Motors passenger vehicle business will be segregated and they will be listed as two different and separate entities. And many experts believe that this could lead to potential value unlocking, especially in the valuation of Tata Motors passenger vehicle business and electric vehicle business. And as a final thought, Tata Motors is facing short-term hurdles, there is no doubt about it, but its long-term potential growth story remains strong. So what do you think? Will Tata Motors make a comeback? Write it down in the comments. Thank you so much for watching. I will see you in the next video.